It's a meltdown of epic proportions. Global stocks, currencies and commodities all plunged on Thursday as investors fretted over the economic impact of the coronavirus outbreak. Many of them had pinned their hopes on a strong stimulus package from the world's largest economy. Instead, US President Donald Trump announced he's shutting the doors to travelers from one of the country's largest trading partners, the EU.
The European Union failed to take the same precautions and restrict travel from China and other hotspots. As a result, a large number of new clusters in the United States were seeded by travelers from Europe.
The decision shocked EU officials who say they weren't consulted and will retaliate. It's also spooked investors, many of whom see it as another blow to global trade.
The United States have always been a defender of free markets and free trade, and if people can no longer travel, that's definitely not a positive sign. It makes clear to everyone now that the coronavirus crisis has begun to hit the economy.
Meanwhile, the European Central Bank is setting aside $136 billion to help cash-strapped businesses.
The latest indicators suggest a considerable worsening of the near-term growth outlook. The disruption of supply chains is impeding production plans in the manufacturing sector, while necessary containment measures against the further spread of the coronavirus are adversely affecting economic activity.
But the bank disappointed many investors by failing to cut interest rates. That sent asset prices tumbling even lower. European stocks fell 10%, their biggest daily drop ever. The prospect of more factory shutdowns and lower global trade drove oil prices down to levels last seen in 2001. And even the search for safe haven assets seemed futile as gold plunged by 5%. As market losses run into hundreds of billions of dollars, analysts fear this could trigger a global recession.
Perhaps this is the rollover that people have been expecting. I think people have been concerned for so long, looking over their shoulder, waiting to see, has the next recession started? Have we finally petered out? That there is a knee-jerk reaction in today's response and what you're seeing in the market. People are anxiously anticipating that next event that will cause the recession. Could this be it? And I think that's going through a lot of investors' minds.
It's a possibility that many governments say they are gearing up for. But as the spread of the coronavirus has shown, only a well-coordinated global response will work. Mobin Nasir, TRT World.
All right, let's get more on the markets now from Jade Barker, who is at the New York Stock Exchange and joins me now live. Jade, just an absolute rout on Wall Street today. The Dow was down well over 2,000 points at one time. Break down for us what's causing this movement on the U.S. stock markets today.
Yes, Rachel, it's been a turbulent day here, to say the very least. Like you said, at one point the Dow was on course for its worst day since 1987, but it does seem that stocks are now appearing to pare back losses after measures were taken by the New York Fed to introduce new repo operations and Treasury purchases. Now, that was in a bid to try and shore up the market and keep liquidity flowing, and that does seem to be having some type of impact. But it has been a rough and tumble day here on Wall Street. Like I said, the VIX, which is a widely considered the best fear gauge on Wall Street, has also hit its highest level since 2008 at one point today. And we did also see earlier this morning that there was a halting in trade that was triggered. Of course, it's hit stocks in all types of industries. The travel industry in particular has been very affected. We've seen big losses in big cruise companies like Carnival, Royal Caribbean, Boeing stocks, other airline stocks also slumping. JP Morgan cut Boeing's long-term overweight rating on the plane makers' shares. Of course, Boeing has already been going through a pretty tough time under pressure from the grounded 737 MAX jets, and it has lost more than 40% this year, and this has just added to its woes. American Airlines and United Airlines stocks also plummeting today. Investors are also unnerved about a lack of any targeted stimulus measures.
Right, yeah, Jade, you mentioned that move from the Fed to help ease the strained capital markets. But what else are investors looking for in terms of stimulus measures to help, ease pressure on the economy?
Right, yeah, of course. I think what they will be really looking for now and are highly expecting is when the Federal Reserve meets next week that they will introduce another rate cut. Just remember that they introduced one just last week, which was unexpected, of 0.5%. So I think expectations now will be pretty high that that will go ahead next week. We've seen central banks around the world embark on policy easing spree in recent days. The ECB approved fresh stimulus measures today, leaving rates on hold, and this dismayed market. So I think that investors here will really be hoping for a different move from the Fed. US lawmakers as well are still debating a broad package of proposals. This is still going through the US Congress at the moment. But if it is passed, the legislation being debated could grant workers 14 days of paid sick leave, 3 months of paid family and medical leave. It could also guarantee free coronavirus for all those people that are uninsured. There is a lot of people here in the US that can't afford to have medical insurance. Other provisions that's being in this bill, put forward in this bill, as unemployment insurance to furloughed workers, $400 million to help local food banks, and other things to try and help with this.
Well, let's get more on the market meltdown now from Santosh Rao in Princeton, New Jersey. He's the head of research at Manhattan Venture Partners and joins me now live. Santosh, first of all, we have seen U.S. stocks recover some of their steep losses after the Fed announced some really extraordinary actions to ease the strained capital markets. Do you think that this will be enough to help right now?
Yeah, I think there's going to be a back and forth right now. You're going to see the market right now is in a shock. There's a lot of cross currents going on. It's expecting the government to do a lot more. We'll see if the Democratic bill passes, what they're proposing. It looks like the Senate has rejected that. So there is going to be a compromise of sort. McConnell has canceled the recess. So I think they are working on it. But I don't know if this is enough. The first reaction was positive, but again, the market has pulled back. So you're going to see this back and forth. We don't know how much is enough. And that's the whole problem. We don't know the severity of the problem. We don't know if this is temporary or it's going to be here for a long time. We don't know the denominator, how many people are sick. So all that is going on. The testing kits have to go on. So this is all work in progress. You're going to see a lot of movement up and down, at least for a week, looks like, till we get some certainty as to what the exact line of action is going to be. So we'll wait and see. I don't know if it's enough. It's too early to tell.
Right. The uncertainty about the virus really is unsettling in many ways. Markets around the globe are down, of course, not just in the U.S., which we saw the Dow move into bear market territory on Wednesday, but also Japan as well, Australia, all moving into bear market territory. What does this mean for investors, and how do you think that this will hit the economy?
Yeah, I think that's one thing. It's across the board. Until we find some light at the end of the tunnel, I think you're going to see there's a lot of negativity right now. The market has hit the bear market right now. It has become a bear market at this point. So it's going to hit everyone till we find some kind of solution. The good thing is China seems to have hit the bottom. So that is good. That's encouraging. Korea seems to have contained it. And that's the game here, too, at this point. It's containment. There is no solution yet. It's going to take a while to get the vaccine. It's all about containment. And that's what you're seeing, the social distancing that you're seeing, all the sports events getting canceled, all the big gatherings being canceled. So all that is good. And it has to be a lot more based on what the experts are saying. So the governors are getting into it. It's going to be a concerted action. What President Trump suggested was just the beginning, but there was no concrete step yet. The Congress has to approve everything. So we'll see. I mean, we are moving in the right direction. I think the severity of the problem has been recognized. So I think that's established now. There's no Democratic-Republican divide at this point. Everyone wants a solution. So we'll see. There is going to be an economic hit, like the earlier correspondent said. there are people going to be affected, especially the hourly workers, the temporary workers, and people who rely on day-to-day earnings. I think that's going to get impacted for at least a quarter. That's according to experts. So there has to be some compensation there. A lot more to be done. We're moving in the right direction. Let's see if the market buys into that. But until then, you're going to see a lot of movement more towards down than up.
Right. Santosh, as I mentioned earlier, the Dow moved into bear market territory on Wednesday. The U.S. had been in a bull market for 11 years. 11 years. Do you think the market was overdue for a correction? Of course, this would be an extreme version of that, but do you think that it was basically waiting for the right moment for a correction anyway?
Yes, you can say that, because I mean this is after it's a record bull market since I think some statistic 1999 I think is the highest, the longest running bull market. So I think that it was due for a correction. We thought we had it before, and every time it came down, it went up again. So it was due. It needed something like this. Market was on the edge all along, but the underlying fundamentals remain strong. And there's the lowest unemployment. The consumer is still strong. So the U.S. economy is strong, and that's a good thing at this point. And that's what's holding up the market. If we didn't have this virus, this problem, I think we would have still been here. Everything's fine on a fundamental level. It's just these exogenous events that have really tripped the whole thing. But we'll see. Maybe we'll come back up. So we don't know yet at this point. Let's wait and see for at least another few weeks till everything comes through and there is some certainty in terms of action and fiscal policy.
Right. What goes down must come up, as they say. Santosh Rao, thank you so much.